I'm Joey Blanco with RWB Realty Group. Today I wanted to talk about interest rate and how it impacts your monthly payment. I'm going to keep this video super short. So here we have a $200,000 home. We're doing 3.5% down since it's an FHA loan at 7.5%. We're doing it over 30 years and the house payment is going to be $1,912. Now, to put that into perspective for you, not so long ago, interest rates were at 3%. So we were at 1912, I believe. Now we're down to 1366. So with the interest rates being up higher, they're definitely affecting what your house payments are. Now, I'm getting clients calling me, telling me that they want to keep their house payment under $1,000 and they want a home that they're describing. Well, the home that they describe is not a $1,000 a month house payment home these days. The home that they're describing is, 3 bedroom, 2 bath on a little bit of land and so forth. And we simply can't do that these days in Oklahoma City or even around in the metro. Now the 3 bedroom, 2 bath, we could probably still swing, but you're not going to get a little bit of land. And keep in mind that the 3 bedroom, 2 bath is going to be smaller than the average house, probably under 1,200 square feet. So just keep that in mind whenever you're thinking about purchasing a home. Think about how interest rates can affect you. Now, if you wanted to stay under the $1,000, that was just, and I understand, you have a budget and you want to stay under $1,000 a month. Well, that's fine. Let's take a quick look to see how we could do that. So let's take the interest rates back up to where they are now, and they're actually a little bit, as of today, they're a little bit higher. And let's bring this down to a $100,000 home. Okay. So let's see what the payment is. So there you go. So $100,000 home, 7.5%. That gets you under the $1,000 a month mark. But keep in mind, this is an FHA loan and you're going to have to bring $8,700 to closing. Okay, I'm going to pause this video right here because I want to clarify something real quick. Now, I say that you cannot buy this home with no money. That isn't exactly true. In most cases, you're going to need to bring money to closing. Okay, you're going to have to take care of your closing cost. Now, in some cases, you can get the seller to pay your closing costs. And depending on what type of loan that you're getting, will dictate how much closing cost the seller can pay for you. Now, this all falls under the negotiations. And if you're in a market to where if you're in a seller's market, the likelihood of them paying your closing cost isn't good. So that's why I kind of leaned this direction, saying that you're going to need to bring money to closing, because I don't want to give the expectation that all sellers are going to pay your closing costs, because that simply is not the case. And then secondly, you really shouldn't be buying a house if you don't have money. I mean, you're going to need money for an emergency fund. You're going to need money for your closing cost. And so coming into a home purchase situation with no money whatsoever is just not a good idea. All right. Just wanted to clarify that, and I'll go ahead and move on. So you can't do this with no money. You have to have money for closing cost. Now, I'll run it through you real quick. $3,500 of it is your down payment. Prepaids, which you have to prepay the taxes and insurance in advance. And so you're looking at $2,753 for those. And then, of course, your fixed closing cost. That's just what it's going to cost to close the loan administratively, title insurance, mortgage inspection, all the things that go along with purchasing a home. These fixed costs uh, are what they are. And same with the prepaids. Now you can shop, not for the taxes, but for the insurance. Maybe you can get a better rate to bring that premium down, and that will affect what your payment's going to be. Now, also keep in mind that year to year, and we are feeling this more now than ever, is your insurance rate can and probably will change year over year. I just had a monster uh, rate increase on my house, and at the time of my rate increase, I didn't even have a claim in or anything. It's just they did an adjustment and my rates went up, I want to say by $700 a year. It was quite a bit. So even though your monthly payment as of today, if you purchase this $100,000 house, is $956, keep in mind that in the future it can go up. Now, have I seen insurance rates go down? Ah, not really. They're always wanting to charge more. And so that 956, same with taxes. Your taxes, theoretically, they could go down, but most of the times they go up. So 956 will be the floor of what your payment's going to be. And year over year, it'll probably slightly start creeping up. So keep that in mind. And that's all I have for you today. If you're looking to buy or sell a home, please think about us. Give us a call at RWB Realty Group. Doesn't cost you anything to have a conversation. And if you like what you hear, you could hire us and we'd be happy to help you. Thank you.